Hi, darlings. We are getting close to our super macro POI intersection, our area of confluence where the sequences line up across multiple securities, in the mean basket, the Max 7, etc., in where the market has to make a decisive decision, injecting volume from dark pools into the NYSE. Now, before I get into this and where we're at with AMC GME, and I want to go into that, I want to talk quickly about Keith Gill and TheRoaringKitty tweet from last week that there was absolute hysterics because it is becoming, without a shred of a doubt, continuously obvious that Keith is well aware of these POI locations. I'm talking micro, macro, and super macro. And while I am also very well aware where these locations are, what I am not aware of is which exact POI that these stocks, whether it doesn't matter what security you're tracking, where exactly they're going to hit. Okay, there have been many times I've done it live on Twitter. I have called the micro to the day within a 4-hour window, within a 1-hour window. News drops hit within a half an hour. Boom, absolutely nailed it. But I can't do it consistently because I'm not the one controlling BlackRock's algorithm. You guys have to remember, BlackRock, State Street, Vanguard own 93+% of the world's assets. BlackRock's Aladdin system I sold against at Adenza. So I'm well aware of its capabilities. It is the largest investment management and risk management and most expensive solution on the planet. Okay, so whatever algorithm is controlling the repeating fractals on the NYSE across all these hundreds of thousands of securities, volatility products, fixed income, etc., is also it either is Aladdin or it's running adjacent to Aladdin, because if Aladdin has all the asset management, tangible assets, that separate algorithm could be using that next to it, running in parallel in order to control the global markets. And that's why you see the synchronicity line up between securities whenever big moves are coming around our super macro POIs. So your next super macro POI is leading into basically October. And remember, the election is coming up in November. Big fucking coincidence. These things are systemic. They're designed this way. It's not chance. The repeating fractals repeat for a reason and repeat within synchronicity to other securities in the market, because depending on what the news is, the larger the news, the larger the movement, the larger the POI, the more volume that has to be taken from dark pools, moved over to the NYSE, the more hedges that have to come in across the tape, the more options you're going to see in, the more flow, etc., etc. Everything is coordinated, from the fundamentals to the options tape to the narrative, the flow, the sequence, everything. So let's go over really quick Keith's tweet. So he tweets this Toy Story Chewy thing, and it looks like every single time, if he tweets every single day, like he did when he first came back, you're not going to see extended movement because they're too obvious. And there's something that's going on with his Twitter that it's directly linked to the algorithm. If he takes a break between tweets, so he tweets once in the first of the month and then maybe once in the end of the month, you're going to see that volume come in from the dark pool account. And as you guys saw, there were also trades that came in on the options tape where people entered and exited really quickly right before his tweet. So something much deeper is going on with his Twitter. I personally think it's directly linked. I mean, he tweets about Chewy and all the pet stocks run at the same time. So in order for that to happen, what you guys maybe don't understand is that has to be allowed to happen. It's not like Nick Pantano tweets about AMC and volume comes in from the dark pool and fucking sends it, right? He is a prominent figure. They made a Netflix documentary about him. Netflix is owned by BlackRock. He is a prominent figure in the space. They're using him as a patsy to cover up these movements. Every single time you see these stocks move, they blame him on CNBC. They blame him on Bloomberg News. They blame him on CNN and Fox. All the media companies are under BlackRock's umbrella. Okay? So they're using Keith to cover up what's going on behind the scenes. Now, I want to talk quickly about a couple things that I retweeted that people were asking me questions in that thread, because they're really important. Like this one guy here. He said, what if what you're seeing and that I'm taking advantage of, this rigged system, is something that Keith also knows. And I've answered this question seemingly like 100 times. When I said to this guy, I said, Alex, there were 10 micro POIs from August 1st until now, which were in September 10th. There's more than that. I think there was 12 up to this point. How come AMC and GME didn't run on any single one of those POIs? Every single POI was snubbed. You could see little micro movements, volume come in, 2% days, 3% days. You had that one dip at the end of August on the 27th that I called 2 weeks before it happened. That was a minus 10% day, minus I think 12% on GME, 10% on AMC. He is being told which POI is the one where the most volume is going to come in. And when he tweets, because they're telling him to tweet on that to cover it up, that's how the system works. And that's what you guys gotta really hammer in your heads. No one knows the exact math of the algorithm, so no one can know exactly which POI is going to be the one where the volume comes in or not. It's impossible. So for it to keep happening so consistently with him just shows that he's on the inside in some way, shape, or form. They see him tweet and they think that the stocks are moving because of him, because the news is reporting that he's tweeting as the reason, but it's really not. We see the sequence before it happens. We know where the POIs are, so we can anticipate the moves before they happen. This one person again said, Nick, how do you know that Kitty just doesn't know what you know? And I'm here to tell you that one person does not move the stock market unless they're allowed to move the stock market. BlackRock turns the volume off and on from dark pools like a faucet. Okay, they decide which day on which POI and how much volume is allowed to come in from the dark pool onto the NYSE. So I'm going to reread this tweet really quick. Retail or one buyer does not move markets. They're completely controlled via alternate trading system, dark pool accounts, exchanges. Flow hits the NYSE and is managed like a faucet. BlackRock allows or doesn't allow flow to hit the tape in pre-programmed fashion because they know which POIs are the ones that need to hit because the news is pre-planned around these POI dates, okay? When you trade, say I throw in $10 million on AMC, not all of that $10 million is going to the NYSE. Once a certain threshold of volume is hit, the extra amount of that is routed to a dark pool so it doesn't affect the price on the NYSE. Does that make sense? Because think about a global investor, from any country, comes in, drops 100 million on Apple stock. It would send Apple stock flying that day. They can't have that. It's tied to an algorithmic repeating system. They can't have people coming in and organically just pushing stocks up to the moon, because that would be out of their control. The entire system is based off control. The dealers, the market makers, the custodians are the ones that own the most shares. They're the ones that have the most power in the market. These algorithms are systemically designed to keep control of all securities. You've heard Ken Griffin even say it with his own mouth, right? We as the market makers decide the price of these securities to make sure they're traded fairly and things don't get out of control. If you coordinated an event where it was, let's say it's organic, and you coordinated an event, we're gonna buy XYZ stock today, all of us, we're gonna put $30 million into it, you could pump and dump a stock yourself, especially if it had a small float and was trading maybe OTC. And this lie is exactly what the GameStop narrative is built on. The fact that all these retail buyers came together to buy options and shares, and so much volume came in that it pushed up GameStop 18,000+% in this ridiculous squeeze fashion where shorts got this and that. The whole fucking thing is a lie. The entire thing was coordinated by institutions. The volume for that move came in 5 years prior to the move. It was trickled in over time through accumulation with institutions. This has nothing to do with retail buyers. Retail does not move the stock market. The data is clear as day. We've reviewed it for 3 years straight. You can look at any chart and see how much volume was bought on that day and how much volume was actually allowed to enter the VRVP shelves, which show you the supply and demand zones on the macro and the super macro. Stocks that are Mag 7 stocks that are highly underneath this window being viewed, like the meme stocks, they're not going to allow that to happen with those stocks. They must retain control, okay? So when Keith Gill says nothing for 2.5 years and comes back and I will pull up the chart for you. And tweets here, remember, this is crucial. Every single POI has the ability to play out to a larger extent if it's a larger POI in a larger time frame. However, we do not know if there is going to be extensions or not within the repeating sequence. Keith also should not know that. It is impossible to know that. Only the market makers and the ones controlling the repeating algorithm know where the extensions are going to be. He doesn't fucking tweet for this long of time. Use your fucking brains for 2 seconds, please. When he doesn't tweet this entire time and then just happens to come back the day before the merger between TD Ameritrade and Schwab happens, okay, on the launch pad. This is when he tweeted, okay? It's not possible for him to know that that POI is the one that was going to send it, because the market could have just went like this. And they could have extended the sequence and then ran it here. So how does he know to the day that that was the beginning of the January fractal? How does he know it wasn't going to get extended like we've been extended this entire period in time through this? I said this to you guys in a previous video. When mergers happen of this size, with TD being, Ameritrade being bought out by Charles Schwab. Charles Schwab was also one of my clients at Adenza. And I can tell you that they had a ton of losses in their fixed income department, which are all publicly available for view. Now, if they're gonna bring on TD, and TD owns a ton of AMC and GameStop shares, which they're lending out to other firms like hedge funds to be borrowed so they can continue to short the stock. That merger happens, there is new counterparty risk changes. There is liquidity risk. There is collateral risk. There is compliance risk. And there is regulatory risk that Schwab doesn't want to take on. So they tell TD, hey, listen, you have all this extended risk that we don't want on our books when this merger is complete. That has to be unwound. And go figure, the next day, stock's just having a run for fucking 100%. The writing's on the wall, guys, okay? They don't want you to know that TD had all this extended risk where they were lending out shares to be borrowed by hedge funds to short the stocks. So what do? They have Keith tweet the night before, and then CNBC goes on and blames the run on Keith and not TD. This is not so hard to decipher and understand. You just have to know what's going on behind the scenes to put the pieces of the puzzle together. Don't be prisoner of the moment and just take what you see at face value on the news, because more often than not, they're completely lying to you to push an alternative narrative. We've been sitting here for 3 fucking months watching sideways price action. Right? Any one of these POIs could have played out. Any one of them could have played out to the upside. But they didn't. Right? This was snubbed. This was inverse, snubbed. All of this was snubbed POIs on the micro. Where's Keith? He's not tweeting because there's no macro POI here. There's no super macro POI here. We are entering a super macro POI, which I know about, right here. This is your next super macro POI time frame. It's right here. That's why we're talking about this. That's why we're positioning for it. Calls out to November, out to December, out to January. Play it safe. Don't over leverage. Buy at the money strikes. Okay? But this whole Keith Gill thing it's a farce. And you will see him be used as the patsy moved forward as GameStop and AMC make their final accumulation on the super macro phase D moves, which take you all the way up to new all-time highs. That is where this is going. They're going to repeat the same goddamn narrative that they did from the beginning. It's going to do the same fucking thing over and over again until we get to the end of your super macro POI going into December 2025. Okay, so let's look at all these. Let's look at the charts quick. AMC and GME have the exact same repeating sequence. They're running in tandem. The setup is the exact same thing. So you're going to see the exact same price movement going into your super macro POI into October. The problem is right now, we are harped on what is going on with SPI and CPI and PPI. These two next inflation numbers that come out are the most important inflation numbers of the year, because FOMC and rate cuts are expected on the 18th. OPEX is on the 20th. The expiration is on the 18th. All these moments and news is lining up to this super macro POI. So it's incredibly important that we nail it and we map it the right way, because there's only two ways this is going to happen, basically. So you're either going to see us blast off from GME earnings, which is today, which is not going to fucking happen because it's too obvious. More likely than not, you're going to get an IV crush and they're going to sell the news, taking you back down probably to this low demand zone. If CPI and PPI come in hot Wednesday and Thursday, you got a fucking problem, because the S&P is going to, which is currently trading in a mid-range right now. Let's draw this really quickly. Supply zone, right? And then here's your demand zone. You're trading in a mid-range. Super simple to understand. Mid-range, mid-range, mid-range. Your demand zone is larger here, okay? There's more volume here. Let me pull in the shells. Because your demand zone has higher volume, it is stronger than your supply zone, which has lower volume, both buying and selling, okay? So while you're trading in the mid-range, it's waiting for news to decide which direction it's going to go. It's going to continue churning. Is CPI and PPI going to come in flat or cooled? It will continue to churn higher up your volume shelf and liquid test new all-time highs. If not, and they come in hot, they're going to fucking drop this thing right to your next shelf. Simple as that. If you get this direction, you are going to see AMC and GME get that dip that I talked about in scenario 1. Okay? You are going to get this before we make our first run going into the first week of October. Okay? September 27th is your next micro POI, but it's also right on the cusp of your macro POI going into the October window. So if CPI and PPI come in hot, expect this sell-off to happen. If CPI and PPI come in flat or normal, just expect us to make a run. And then you begin. I will update you based on the news, based off the inflation metrics, and based on what happens in the next week. Remember, FOMC is on the 18th. So are they going to drop the whole market leading into FOMC? Not really likely. But is it possible? Absolutely. If you get that dip and then they cut rates, expect us to blast off after. Okay? So if you get that, that's really what your scenario 1 should have played off like at August 27th, that POI. That was your dip on your August 27th POI. You might get a bigger one here, which is awesome. I mean, it's a 20% drop. That's your fucking buying opportunity. No one, and I mean fucking no one, should be complaining about that at all. Because if you get that rip to $8, which is your next supply zone, resistance, not confusing guys, simple charting, 100% run. That's fucking ridiculous. 100% run? You're talking 2,000% your options at a minimum. And on GME, your first move is quickly to your GP, right? 40, 45. Same exact time frame, September 27th POI. That's your supply zone. That is where you will liquid test first. Okay? So that's where we're at. If you guys have any questions, let me know. Depending on where CPI and PPI come, we'll tell you where the mean basket goes on the next move. GME earnings are today. It's not a fucking coincidence they made GME earnings the day before CPI and PPI. Use your fucking heads. Everything is coordinated. Everything is rigged. Stay safe. Stay smart. See you in the chat.